I want to go. I want to go through your article, the tax cliff. But yesterday, I want to say we invoked you because people were talking about whether Romney needed to decouple from Bush, and we were looking at the years, and we went to your chart that you and Steve Moore did for that article. Spending really started to take off in what, 07, 08?
Yes, it sure did. The last 2 years of Bush were the biggest increase in spendings of ever. I mean, and the biggest collapse in the economy. It was just tragic.
And then Obama kept the spending going.
Yeah, well, the spending stayed very, very high. It did not increase anymore under Obama, that's for sure. In fact, it has come down a little bit just because he wasn't able to get a lot of his plans in. But Obama's spending is way higher than the historical norms, much, much higher.
But even though you say it went down, the net effect was to increase the deficit even more, right?
Very, very much, yes.
All right. Let's talk about the tax cliff. Let's talk about what happens in 2013, because I think voters need to be aware of that.
You want to scare them really that badly this morning?
And what's that?
You want to scare them in the morning?
We're having that kind of a scary day. Of course, Obama's scaring us, telling us that he kills people and all sorts of things.
That's amazing.
We might it's amazing and gross and grotesque. Yeah. What do we know, Art, that will happen in 2013?
Oh, we have lots of tax increases coming. The most commonly talked about ones are the personal income tax rate going up. You're going to have the capital gains tax rate, the dividend tax rate. You're going to have the death tax go up. All of those are well known, but you also have the payroll tax going up. You have about 20, 25 other taxes also going up. You've got the Obamacare tax coming in on January 1st, 2013. So you have probably in the neighborhood. Now, static measures of this by the CBO is about $500 billion static in tax increases on January 1st, 2013. And if you compare that to total tax revenues of about $2.5 trillion, Bill, it's about a 20% increase in every single tax, every single federal tax. It's an enormous one, much bigger than the Reagan tax cuts were going the other direction.
Will these taxes, Laffer, be felt by people making less than $250,000?
Oh, it'll be, the payroll tax alone is 2% on that. There are all sorts of taxes. You 100% expensing of capital purchases, that goes away on December 31st. They're just all over the place. The add-on to Cadillac health care plans. I mean, there's just no limit to the number of these taxes that are being put in. And they add up to a lot of money. A 20% increase in all federal taxes is ginormous. I mean,
what about
that'll affect growth and everything.
We hear that the fix may be in. They may be making a deal to extend. What do you know about that?
Well, the fix is only about the Bush-era tax cuts being extended. I don't know of any discussion that the Obamacare tax increases are being considered for not being put back into place.
I agree.
And a lot of these other ones there. So while the Bush-era tax cuts should be extended, and they should, every single one of them, you shouldn't just extend it for this group or that group. You should do it for everyone. But even then, you've got all the people who are planning on the tax increase in case they don't get extended. So once they've baked their shift of income into the bread, it's over. I mean, it'll happen anyway. And that's exactly what happened in 2010 and 2011, Bill. We extended it last minute. Remember that? The last-minute extension of the Bush-era tax cuts in 2010?
Yes,
and
there
was still a big collapse in the first part of 2011 because of that extension. People shifted income into 2010 from 2011, so there was just a falling off that cliff, even though the tax cuts were still extended, and we didn't have these other ones in place.
I know this doesn't affect everybody, but tell us, this is a very dramatic change in the estate tax that's going.
It's huge. I mean, right now, anyone who wants to do it can do a lifetime gift of $5 million. On January 1st, 2013, it drops to $1 million. And the tax rate goes on anything you do leave in your death an estate goes from 35% to 55%. That's about the most disgusting tax I've ever seen, Bill. I mean, I really think conceptually the estate tax is just disgusting. I mean,
are they going to fix that?
Well,
Are they going to fix that?
I don't think so. I think a lot of the Republicans, especially some of the old liners, really sort of like the estate tax. I don't know why they do. But they do, and they've been, they compromised. The only thing they didn't extend in 2010 was the estate tax, which they would have been zero for the next years. But instead, they get it at 35% with a $5 million lifetime exemption. So I don't know if what's going to happen with the estate tax. But, I mean, Bill, you can earn your money. You can pay your taxes fair and square. You can go to Vegas, you can carouse, you can gamble, you can drink, and you can smoke. And as far as the federal government says, fine, that's great, God bless you, go for it. But if you take that same money and give it to your kids or your grandkids, they slap you with a tax of 35 or 55%.
Yeah.
It makes no sense at all. I thought we were supposed to be helping future generations, but it's just they kill you if you do it.
Yeah, you're right. It is a disgusting tax. So let's talk a little bit about, because I don't think people appreciate what's going to happen with dividends and what's going to happen with capital gain.
Well, capital gains taxes, are down at 15%, and they're going to go up. I don't know how high it's going to go to. I think capital gains goes to 25% or something.
I think it's 24 point something. Yeah.
It goes up to 20, and then it has an Obamacare tax on top of it. I think of another 4%.
4.8 or something.
Yeah, 4.8. Yeah, something like that. And then you have the dividend tax, which goes from 15% to 44%. Because it gets taxed at the extra 4%, plus it goes up to ordinary income rates, which is 39.8%. So it gets up to 44%, something like that. That's a big increase in taxes on dividends, Bill. It's from 15 to 44%. It's not small.
What can anything be done to stop all these, any of these, some of these? What can be done?
Well, what's going to happen is there's going to be there's going to be a grand discussion in the House and the Senate and with the President as to what to do. And, we need to change in policy. We need to go back to Reagan. The 86 Tax Act, that's what we need.
Well, I know, and you were a huge influence on Ronald Reagan, as everyone knows. I got to ask you this question, which
Sure.
I still don't understand. Don't these guys, they know how to ask, don't they? Well, what are they doing? I mean, I have listeners who call in and say, Bill, they're trying to wreck the country. I can't believe people are purposely trying to wreck the country. I think they somehow think this is going to work, and we're going to work our way out of this. But what are they thinking in raising all these?
Now you're taking me out of my turf, and I'm getting more into your turf and psychology.
Okay, I know.
But I'll tell you,
smart guy.
In groups, guilt disappears. If a crowd tramples a little girl and kills her, no one in that crowd actually feels the personal guilt of killing the little girl. So when you have a group think type of thing, it eliminates personal sort of responsibility for the actions. That's number one. Number two, in groupthink situations like today, politics. It's our team versus your team. No matter our team is our team, right or wrong. I mean, and that's what there is no one in America today who would run his or her family the way our Congress proposes running our country. That they know it's wrong, Bill. If they sit down with you one-on-one and we talk, they know it's wrong, but it's their team. And it's gotten partisan that way. Now, that will break apart. In the 86 Tax Act, you can't believe how many of these people today voted to cut the highest rate from 50% to 28%. I mean, Alan Cranston, Metzenbaum, Bill Bradley, Al Gore, Joe Biden, Chris Dodd, Teddy Kennedy, Schumer did, Reid did. I mean, these were all in the House then. Barbara Boxer did, Durbin did. I mean, it's just amazing how many people in the clear light of day of sitting there thinking good economics will return to the fold of helping America.
Yeah, all right, but we can't do much between now and the beginning of next year to avert this cliff.
We just need to continue the tax cuts for another 6 months or a year or whatever it is, and let the new Congress and the new president decide whether they need to be extended or ended.
If we continue the tax cuts for another 6 months or a year, do we avert the worst of the cliff?
We divert a lot of the cliff. We do not divert all of it by any means. We still are going to have a big drop-off in the first half of 2013, according to my calculations.
A big drop-off of?
Output, employment, and production.
Output, employment, and production.
So many people are accelerating their bonus payments, their salaries. They're selling their stocks off. They're selling their taking money out of their IRAs, their KEOs, their 401ks, paying taxes now and moving into a Roth IRA. A lot of these things shift income out of 2013 into 2012, and so it makes this year look better, but it makes next year look pretty harsh.
All right. Well, it's a very realistic assessment, and we have to look reality in the eye, and that's the only way to look at this election. Thank you, Art Laffer.
Thank you for having me. It's great to be on with you.